what we have had in any time that I have been able to find as a part of the teacher's retirement system as we go up to that 16.8% level. You can flip the page to the factors impacting our contribution rates, and we share some of these things, including our actuarial assumption changes, our investment earnings, assumption changes, of which we have lowered within the past few years, lowered our assumed rate of return, and that is good for actuarial soundness, but it does mean that sometimes there's a little bit more of a contribution that we make because we don't have a higher assumed rate of return. Increases and decreases in actively contributing members, and also increases and decreases in member salaries. The next page is a very interesting slide to me. It shares with you over a number of different periods of time that have been looked at what our rate of return has been, and whether you look at that 3-year average, 5-year average, 10-year average, or 20-year average, we're really close to that 7.5% rate of return. And we think that's good. If you take away some of what happened to the system during the recession that we recently had, I think you would see us well above that 7.5% rate. But again, I think you have to be honest and recognize that we're still recovering from those years that we did not have the returns on our investments that we would have liked to have seen. One other factor that I believe that I'm still studying, being relatively new as director, is the number of active members that we have in the system. If you look in the next slide, you will see that gap between the number of retirees as reported by year end in June 30, 2016, but that gap between the active members and retirees has narrowed. In fact, if you go back to 2009, you will see we had the largest number of active members. That means more teachers, more people employed by the university system, technical college system, and our other members, 226,000. We are approximately 8,000 fewer people who are contributing into teachers' retirement system today than we were in 2009. However, the retirement numbers have continued to increase. You could ask a lot of questions why that may have happened, but I think the reality of it is this was the way that many school districts worked to control their budgets during the years that their budgets were impacted. I would, as a former school superintendent, I'd also tell you I would think that what the legislature made happen and made available through either the IE squared, our strategic waivers, and our charter districts gave some flexibility to districts to help them save money. The downside for us is that means there are fewer people actually working and contributing into the teachers' retirement system of Georgia. And we'll continue to look at that and see if we can determine exactly how that is impacting us. The final thing that I'll share with you is that as you look at the economic impact, the money that goes out each year, the over $4 billion that are paid out, has an economic impact of great significance to our 119,000 retirees. Total economic impact just for January, we've calculated to be $533 million. Share with you in closing from our retirees, they appreciate the retirement system. Share with you for those active members who look forward to retiring, they're looking forward to it. So they have great expectations on us to do everything that we can do to maintain viability, sustainability for a strong fund. And with that, if you have any questions, I'll be glad to hopefully try to answer them.
Does any of our committee have any questions that they would like to ask? I don't think at this time, it does cause me to have some questions I think that would have to be directed to you, and then a little bit later on that we get that information back, but we'll be talking soon about that. But thank you. This has been very informative, and we appreciate you coming.
Great. Thank you, Chairman Battles.
Mm-hmm. All right. Well, here's one of the old guys. I won't say he's been here since dirt, but at least Lent. We do recognize him. And
Did you say Lent?
Lent. That's not a religious holiday either. Well, welcome back, and share with us what is, as the governor's speech today is all positive and good and makes us smile, and what we can expect in the days to come.
Well, it's my pleasure to be here. Thank you, sir. Members of the committee, with apologies for those of you who may have already heard this so far this year. I'm Jim Potvin. I'm the executive director of the Employees Retirement System. The agency known as the Employees Retirement System is responsible for 5 defined benefit plans. That's the ERS for state employees, the public school employees, non-teaching employees of the members of the public school system, the legislative retirement system, the judicial retirement system, and the Georgia Military Pension Fund. We are also responsible for 3 defined contribution plans, including the state's 401k and 457 plans, and as well as 2 life insurance plans. The financial story, the actuarial story for ERS is one of improvement. So those of you who have been here for a number of years recall me talking about my desire to turn the system around from a number of years of declining funding ratio, and I'm pleased to be able to tell you that over the past 2 years we have in fact started to turn that corner. For the past 2 years, each of our 5 defined benefit plans has improved, albeit modestly, in its funded ratio from a low of 71.4 2 years ago to 74.1 in the most recent actuarial evaluation for ERS. At the same time, the increases in the required employer contribution rate, which, as you'll recall, were fairly substantial for several years, have also stopped, at least for now. FY18 will be the 3rd consecutive year where they will be essentially flat from the prior year. So I view that as good news. And it's similar for all of the other systems as well. The public school employees rate in 17 was actually $2.3 million lower than it was in FY16. The rate for the judicial retirement system will actually decrease for 2 years in a row, and the Georgia Military Pension Fund sees only a modest increase. This is particularly good news in light of the fact that every 5 years we are required to do what we call an experience study, which basically looks back over the actuarial assumptions that were set 5 years prior and compares them to what actually happened over that succeeding 5 years and makes adjustments going forward for the future 5 years. We knew going in that mortality rates are actually improving for our membership. It's good news for them. They're living longer. Of course, that does have a financial impact, and the question was going to be how much that was going to impact our systems. We had heard that mortality improvements were impacting some of our peer systems by somewhere in the neighborhood of 3 to say 6 or 7%, fairly substantially. In our case, while we did see those kinds of impacts, we were able to offset them with other changes to assumptions, so that essentially the experience study turned out to be neutral from both a contribution rate and a liability. There were very small increases in the overall liability of the system. So overall, very pleased with that result going forward. And we have now tried to build in margins for what we know to be future anticipated actuarial mortality improvements as well, so that we can anticipate that. The ERS is a $15 billion system overall. The ERS plan itself is about $12.3 billion. We pay out about $1.25 billion per year in benefits to our 48,000 retirees, with an average monthly benefit of about $2,300 per month, or just under $28,000 per year. Since our investments are done in more or less pooled manner with those of the teacher's retirement system, you'll find that our investment returns are very similar to those that Dr. Evans talked about before. We're a little bit over 4% year to date, so that does put us roughly on track to meet our 7.5% investment rate of return for this year. I too have shown investment returns on an annualized basis over varying time periods, One thing that I do tell people is that we look at things from a long-term perspective, and as Dr. Evans pointed out, the longer the perspective that we look at, the better the overall investment returns have been over that long term. One thing I do get asked about, the one more or less significant investment difference for us is the fact that we are allowed to invest in certain alternative investments. For us, that means we have a private equity program. It's about 3 years into that program now. I told you at the time that the bill was being passed that we would do this in a slow, measured kind of manner in terms of how quickly we got into these deals. Little did I know how slow and measured it would be. After 3 years, we are only about 0.7% of our fund invested in private equity deals. It's about $94 million overall. And thus far, it's a little bit early to draw any real conclusions, but thus far, the returns have been what we would hope for. We've been running about 2% better than our average returns for our public equities portfolios. So we are pleased so far. On the second page, you can see our membership numbers. I will point out that these numbers are typically lower for all of our systems, most of our systems, than they were 5, 6, 7 years ago, most notably for the ERS, where we peaked with a high of about 75,000 active members. Now we are a little bit under 60,000. Payroll base went from about $2.8 billion down to about $2.3 billion. So the increases that you see in our contribution rate is partly driven by the fact that the payroll base is smaller, and so the percentages to get the dollars into the system were required to be somewhat higher. Brief note about Peach State reserves. The GSEPS tier, the current tier of the retirement system, what some refer to as a hybrid system, the 401k plus defined benefit component, is now about 8 years old. We have approximately half, just over half of our active membership now is in that tier. The other half is basically in the second tier, and the old plan, the first tier, has fewer than 100 active members at this point. One of our focuses for the GSEPS population was to get them into the plan and saving at a rate that would enable them to receive the full possible match from the state to their contributions. As you'll recall, if you save 5% or more of your pay, then the state will provide a 3% matching contribution. When the program was first put into place, people were defaulted into the plan, to the 401k plan, at a 1% savings rate, and subsequent experience showed us that people would tend to stay in large numbers at that defaulted rate. So a couple of years ago, we requested and you passed a bill to increase the default rate, and the results that we have seen are truly remarkable. You can see them in the GSEPS update section, where as of the end of 2012, only 13% of the GSEPS population was saving at least 5% of their pay. As of the end of this past month, we're up to 61.3%. And over 80% of those who have been hired since that bill was passed have remained at or above the 5% level. So we're very pleased with that result, and over the long run anticipate that the savings will be much better for our members. With that, I'll pause and be happy to take any questions.
All right. Does the committee have any questions? We do. Let me see. What number of you? Okay.
16, sir.
All right. Chairman, it's you.
It's me.
It's you.
Okay.
Maxwell. Chairman Maxwell. Chairman Maxwell.
Okay. Thank you, Mr. Chairman. Thank you, Jim. 2 questions. The GSEPs, the people that came in and have stayed under the old or stayed at the lesser contribution rate are not getting any of the state dollars. Do y'all do any education them? Do we send out anything to try to tell them, hey guys, if you're going to invest in retirement, it's to your benefit, long run, to bump this thing up so you can get free money, up to 3%, 2% or whatever? Do you try to make that some type of an annual little push to tell them what they're missing?
That's correct. So there are really 3 ways in which we communicate with them. One is with their annual benefit statement. And last year we changed the format of the statement to show everybody who is in the GSEPS program well, really everybody who's in the system, how close they are to what we would call being on track for retirement readiness. We have a definition of that outlined in the statement. So somebody who looks at their statement will see, yes, I'm on track, I should keep doing what I'm doing, or no, I'm not, and I should take steps, increase my savings, et cetera. So that's one way. The second way is about once a year we do a targeted mailing, either a targeted mailing or an insert to another mailing, which is targeted at these people. It basically says, hey, you're leaving free money on the table. All you have to do is bump up even just 1% per year, and you'll get that matched at least at 50 cents on the dollar. That's free money. So we do that campaign. And finally, during open enrollment for our Flex Benefits program, even though technically the 401k plan is not part of Flex Benefits, we've partnered with them to make it part of the menu of choices that they get. And we found that just by putting it out there as a choice for them to look at, we get several thousand people a year who make an increase in their savings rate just by seeing that as part of their overall open enrollment. So we have been doing it. We've noticed that for that group of people, we've approximately doubled the number of people who have gotten to that 5% or greater level. So they're improving, albeit obviously slower than the people who have been hired since then.
Okay, very good. Thank you for doing that.
Chairman Meadows. Oh, I'm sorry. Oh, okay. I'm sorry. I didn't know you had another question. No, I've recognized you, Mr. Chairman.
I'm just sorry that Brooks is not here so that you won't always get this question from me. But let's go over to the PSEers, and I wouldn't bring that up except for the last 46 years I've slept with one of them, and every month, not that many different ones, but again, Marie gets her wonderful little check, and I know we just kind of buzzed right by some of these things like average annual benefit and things like that. We did that wonderfully well for the ERS, but you kind of skipped right over PSEers. Just comment on that program.
So the intent is that is a supplemental benefit for those who are custodial workers or bus drivers or cafeteria workers primarily. We say supplemental benefit. You could argue that their paychecks are fairly supplemental looking as well, to be perfectly frank about it. And for those who have been in the system for many years, this turns out to be the only defined benefit that they have. Their average monthly benefit is a little over $300 per month. That it takes over 20 years of service to even get your benefit to that level. So it really is a small benefit. $14.75 per year of service is what it's been for 8 or 9 years now, I believe.
Well, I think Miss Marie's benefit is somewhere in the $100 a month range, $139, and my Medicare supplement went up to $109, so she's netting $30 after 17-something years. Realizing we didn't make anything to pay into it. The other, I don't know how many of your legislators realize they have a retirement plan. And I got educated last month because I couldn't figure out where my money was going. Y'all, when you don't make but $17,000, it's pretty quick you notice something's amiss here. And do y'all know how your retirement plan works? Though, 65.
We get $65 a month, but we get $36 a month times number of years served.
Yeah, at age 65.
That's correct.
To get your money back, Howard, at your age 72 now, if you finish out this term, you're gonna have to live to 104, I think. I got to go to 100. I got to go 106. But I do not think that my legislators understand what a good deal they've got. The good deal is serve 8 years and go home and do it right when you're 65. That's the way to. That's the only way. That is the only way to beat the system. We're having more paid out than we take in, That's why you pay $65 a month, members. But I don't know what the rate of return. I go down here to pool investment rate returns. 1 year. What does that mean?
So that means that last year in FY16 we returned that number, 1.4%.
I believe he's asking for a little more explanation.
So, as Dr. Evans talked
you
about,
you were making less than 1%. What happened?
I'm sorry.
You're not making very much money on your investments.
So that's the 1 year rate of return. As you can see, we've also shown you over various time frames. So the last 2 years have both fallen short of the 7.5% that we target, that we assume in our actuarial evaluations that we target for our investment folks. The year before that, I believe the number was 17%. So you can see it's pretty volatile from year to year. That's why I prefer to look more at the longer term rates of return. Decisions that we make, we are a long-term entity. We have members that are in the system for upwards of 5 or 6 decades or even more. So decisions that we make are made with that kind of a horizon in mind. So yes, the last 2 years have definitely fallen below. The 3 or so years, 4 years before that, we were in double figures 3 out of those 4 years. Before that was the 2008, 2009 time period. So we definitely have ebbs and flows in our history.
Chairman Maxwell.
Thank you, Mr. Chairman. Jim, going back to the funding ratio, I had a question up there, and tying on with what Chairman Meadows said, the LRS seems to be well funded at 123.1% in 15. I would be looking at the opportunity to sign on legislation anybody wants to drop to increase our retirement benefit for legislators. If we wanted to raise that a little bit, I'd be open to co-signing on that. I don't know if anybody wants to jump on that or not. But the GMPF, I'm a little concerned about our Georgia Military Pension Fund. That's basically paid. I mean, we got the people paying into that, but that thing's only 49% funded, and I think we have to put a substantial dollar amount in that every year out of the Treasury. Is that correct?
So let's talk about that one. The Georgia Military Pension Fund truly is a little supplemental benefit. For those members of the Georgia Air, Army National Guards who have had at least 20, if not more than 30 years of service, they can receive a monthly benefit of between $50 and $100 per month. So truly just pocket money, if you will. That is our newest fund. It was begun in 2002 and has been slowly being built up ever since. It has an uninterrupted history of its funded ratio actually improving each year based on the way we've been funding it. And the amount that we put in each year for that, $2 million in FY17, $2 million in FY16, increasing somewhat to $2.4 million for FY18. So it's our smallest of the big funds, and like I say, the newest as well.
Okay, thank you. Thank you, Mr. Chairman.
All right, do we have any other questions for Jim? Thank you so much.
My pleasure.
And we, again, look forward to working with all of you in our retirement programs, because I know you're working for many of the people that are sitting right here or working in this building or around this place. And for the TRS, I have one of those retirees at my house. And when I was asked to serve as chair, she said, just don't go down there and mess it up. And I've tried to do my best. I probably mess up anyway, but thank you for all of what you do for our firemen, for our policemen, for everybody that is counting on us to be good stewards of their investment dollars for retirement. Thank you so much. Any other business that needs to be taken care of? I would entertain a motion to adjourn. I have a motion and second. All in favor of adjourning? You won't have to say anything, just get up and leave. All right. Thank you.